GMT, baby. This one is looking great. Very nice cup and handle breakout here today. And we're going to go over some of the price targets to the upside. Okay. There's a very important key level that we're approaching. Not far from there at all. We really need to see this RSI breakout to see continued momentum. And we'll zoom in here a little bit on the 1 hour time frame. So that way, in case this does pull back, things are a little frothy. The RSI has a head and shoulders. You guys will know some of the key support levels that we really need to hold on this pullback for us to, prevent from having a reversal. You can see this is a very, very strong move in a very quick and short amount of time. So, now is a good time to step in, analyze it, not FOMO in, not panic, all right, and make a bad decision or, buy the top and then sell the first dip that happens, but rather try to develop a game plan moving forward. As always, the content provided on this channel, though, is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance content, trading content, and I try to sprinkle in 1 to 2 free trade ideas a week. You can take a look at the website and take a look at some of the past, and previous trade ideas. They've worked out very, very well. All right. Even the most recent one, RTX, we have people talking about going up 88%, on their play for that one. So you can sign up for that using the link in the description. It's completely free. Or you can join the Discord, okay, the Investment Intelligence Discord. That's where you get access to all the different analysis, all the different trade ideas. And it's only $1 right now, okay? Promo code JAN24 will get you guys into the Discord for just $1, right? And then after that period, after the first month, you guys can determine whether or not you want to stay. But I'm trying to kick the new year off strong. And I know a lot of people start off with smaller accounts. So, not trying to, charge you guys tons of money or anything like that. I mean, it's just a simple $1, right? Now let's get into it. We have GMT here, right? Very nice cup and handle. Okay. We have a Kardashian bottom here. That's my favorite pattern, the nice Kardashian bottom, big round bottom there. And then you see we get a little smaller bottom here. Okay, and that is our cup and handle. Now, we mentioned the RSI. Okay, currently at the moment, if you look at your RSI, we've got something known as bearish divergence. So what is that, right? Maybe you've never heard that term. Well, take a look how we're making a high here, and then we're making a higher high here. So it's no secret, right? It's very obvious that the price action is in an uptrend, and we're making higher highs. But if we look at our RSI in the same time period, we have a high, and then we have lower highs. Okay, so whenever the price is making higher highs and the RSI is making lower highs, this is a term known as bearish divergence. It's an indicator that you could see some pullback, right? That you may see price start to drop potentially in the future. Now, one thing that people do wrong when using RSI divergence is if you break through the divergence trend line, that's very similar to breaking through a chart pattern or break, let's say you have a inverse head and shoulders or you have a bull flag, right? And you get a bull flag breakout, right? If you break the initial RSI divergence, right, whether it's bullish or bearish, that's a good indicator that price is likely going to follow that as well. So you do want to pay close attention to this, right? Now, a breakout here doesn't mean that it has to continue going higher up into the moon, right? Actually, if we just were to break out and even just go sideways here, that is a good look for the price action on GMT. So you do want to pay close attention to that coming, here moving forward. All right. But now that we know there's some bearish divergence, right? We're not going to be surprised if we see a pullback, right? We're going to be looking for opportunities at where we can potentially get in on the pullback and manage our risk accordingly with a good stop loss and a good price target to the upside, right? Now, as far as the upside goes, 0.48, 0.4785, basically the same level, okay, using two different methods to get that, using the Fibonacci extensions as well as using the Fibonacci retracements. Both put you right around that 0.48 level, okay? So, there's going to be a lot of confluence here. And if we can actually flip 0.48 to, support from resistance, that's going to be a very good look, right? That we could head up to 60 cents, potentially even higher, all right? But until then, we know that we're approaching that level, we're pushing up higher, and we have bearish divergence at the moment. 0.4137, 0.3488, those were some of the key levels that we needed to get above prior, and we finally did that. If we can hold 0.4137, that'll be a very good look. Now let's zoom in a little bit. And what we've done is added some anchored VWAPs here. Okay, so the purple line is anchored here to the most previous high, right? So, we talk about these trends, these terms, right? High, higher high, okay? So we're anchoring to the most recent high, and then we're anchoring to the most recent low, okay? And what we see is that these purple lines line up, all right, very well with the Fibonacci retracement levels from the most recent low to the most recent high, okay? And so what does this all mean, all right? Why am I showing this to you guys? How can you use it? Well, if we were to get some type of a pullback, right, oftentimes buyers will step in near the anchored VWAPs, okay? And so those could act as support, right? But if you take a look, your anchored VWAP right here is just above the 382 retracement. Your anchor VWAP here is just above the 50% retracement. And then below there, we have the 61.8% retracement at 0.3378. So all three of these levels right here, these are the three most common and well-respected Fibonacci retracement levels, okay? And you use these levels to identify whether or not something is in an uptrend or a downtrend, and whether we're experiencing trend continuation or trend reversal, because nothing moves in a straight line up or down. You get a move up, retracement, continuation higher, or move down, retracement, continuation lower, right? And if we were to take a look here at the most recent period, and we were to, do a Fibonacci retracement from our recent lows, we can see that we pulled back, we came up, we retraced, and then broke through, right? And that's when we actually made a high and then a higher high. So that's what we're looking for on the opposite side, okay? Is we want to see, is this going to be a move up, retracement, continuation of the trend? Or if we move up, pull back, consolidate, and break through here, then that's going to be a good sign that we're getting 100% retracement back to about 0.27, and potentially even breaking that 0.27 low and starting a downtrend, okay, with a low and then a lower low. So that's why you use these levels, okay? And again, the 38.2, 50, and 61.8, those are the three most common and well-respected. There's plenty of other ones that you guys can use. But, oftentimes we want to try to keep the charts clean, and, pay attention to just the major key levels, right? So that's really all I'm watching right now. We can see we have that 0.48 target to the upside, and we're not too far away from there. If we were to break through 0.5, flip that to support from resistance, maybe we could get an entry there for, a nice little trade up to 0.48. Otherwise, just wait and see how this thing develops, whether or not we get a pullback all the way to our major retracement levels. At these levels, it's very easy. It's not very easy, okay, but it's much easier to define your risk. Right, you see we have this consolidation period here. Okay, so let's say we were to get a pullback down to the 618 retracement level. Well, you can define your risk very well there. Okay, you can come in and you can enter a long position here. All right, and then you have a stop loss, below here. All right, something like that, and then you would be targeting. Well, where would you be targeting? Well, you could target, some of the shorter term levels. You can target something like this back up to 0.38, or you can target back up here. And you can target the 0.48 level, right? And so when you look at from a risk to reward standpoint, right, you're risking about this much right here to potentially make this much, right? So that's about a 2-to-1 ratio, or to potentially make this much, right? Or to potentially make this much. And so this is what we mean by setting up and being patient and looking for really well-defined trades and good ratios, right? So, if you enter trades like these with really high risk to reward ratios, and you're looking at potentially making 3, 4, 5 times what you would lose, well, statistically, then you have room to not be perfect, right? And you can have error and still be profitable if you are able to take profit, right? If you have a 3-to-1 ratio, okay, and you lose 2 times, that means you lost, 2, and then you win on the third one. Okay, you won 3. So even though you have a 66% lose rate, that one that you did win, right, outweighed the losses that you made on the other 2 trades. Okay, and this is, just a general tip that you guys want to look for and have in mind anytime you're trying to do some trading. Okay, now hopefully you guys enjoyed today's video. Don't forget to sign up for that newsletter, completely free. You guys can use that link in the description. There's also a link in the description for the Discord, right? Remember, promo code JAN24. Celebrating the new year will get you into the Discord for just $1. Hope to see you guys there, and I'll see you in the next video.